I'm Charlotte McLeod with the Investing News Network, and here today with me is Matthew Herbert, General Manager at Green Technology Metals. Thank you so much for being here today.
Thanks for having me, Charlotte.
Yeah, so we're going to talk about the company today as well as a little bit about the lithium market.
Yep.
To begin, I was hoping you could give me a brief overview of what you're up to and the main assets.
Yeah, we picked up some assets from Arden, which is a ASX-listed gold company in Australia, early last year. Since then, we've built the company up. We listed on the Australian Stock Exchange in November, listed at 25 cents. We're up to around 75 cents. It's been a tough week on markets in general, but we've achieved a lot in the 6 months that we've been here in Canada. We mobilised drill rigs mid-winter. We will have a resource update out very shortly. We've built the team up. We have most of the team over at the moment as well from Australia. So it has been a really fun ride. So we're really looking forward to this exploration season as well.
That's great. And so we know that Canada is a great mining jurisdiction, especially Ontario. I wondered if you could talk about the province's kind of background in lithium specifically.
Yeah, it's. I think to a certain degree it was a bit of an undiscovered gem. We think the geology is very similar to Australia. It's got some challenges around forestry and lakes, but I think that's what's probably protected the place. So Ontario, we're based in Thunder Bay. We are on Lake Superior. It is the crossroads of North America. So we wanted to leverage that. It's got a very early stage hard rock lithium market, but there are some big players there, and we are really bullish on the geology and the opportunities that's in Ontario.
Right, and I understand, you have a pretty close relationship with the government. You're working closely with them. Can you talk a little bit about that relationship?
Yeah, I'm so glad you asked. So we've been welcomed into the province. I think the Ontario government realises that they've really got to start to move. Quebec has probably led the way in some regards. So we've had the red carpet rolled out at a provincial and a federal level. So we've had an opportunity to meet with Minister Rickford. He's the Minister for Resources. We've met Doug Ford, who's the Premier that has just been elected back in. Both are massive supporters of critical minerals. Those things are important when you're at a permitting and approval stage, and that's exactly where we're at. So we're sort of able to leverage those relationships really well, and there's just no better place to be at the moment.
Yeah, that's really important. And, coming to the fore right now in the lithium space and really in the commodity space as a whole is supply chain security. So I was hoping you could talk about that and where you see the projects fitting within North America's supply chain.
Yeah, that's right up there with ESG at the moment in terms of importance. So we have at the moment a real made in Ontario strategy. We want to explore Ontario. We want to produce in Ontario. There's some downstream opportunities, and you guys would be aware of the LG Stellantis. That's a mega deal. That's a $4.5 billion battery deal that's been inked in the last probably month, and that's Ontario as well. So I think the opportunity there is to create some very, very green lithium. At the moment, a lot of lithium is mined in Western Australia, shipped to China for processing. From China, it goes to European battery markets. I think by the time that lithium arrives where it's supposed to arrive, it's left itself a bit of a carbon footprint. We have a real opportunity here to leverage low carbon lithium in a place that is really screaming for security, and that's what we're trying to achieve.
Yeah, let's talk a little bit more about ESG and this low carbon lithium, because I think for a long time people thought, well, electric vehicles, that's green enough, right? But now we're going back to the components and needing to make sure that where they come from is also green.
Yeah, absolutely. There's some interesting investment notes coming out in the last week, Goldman Sachs and a few others, that people are starting to look to Africa for some of that supply. There are always questions in Africa about ESG credentials, the responsibility of the mining, that sort of thing. Canada is very similar to Australia. There are checks and balances right the way through the process to ensure that things are mined fairly. Environmentally, there's real responsibility. There's no exploitation. We think that along with that low carbon footprint, we think that the big hedge funds and the investors will see those credentials as just as important as the carbon side. So, I wish that the African operations all the luck in the world. We think we're in a premium jurisdiction though.
Right, and speaking of jurisdiction, you mentioned Ontario, similar to Australia, you've got the pegmatites. So they're not unknown by any means, but people may be familiar a little bit more with the brine. So what should people know about pegmatites?
Yeah, so for a long time, it was hard rock mining, and that's what we call pegmatites. The brines were always in development. There is a fundamental difference, though, and that is the footprint that they leave behind. So the brines are typically massive operations. They use a lot of water. Processing is far more complicated. Pegmatites are very simple. Our operations will be small pits, deep pits. The processing uses almost exclusively water, and that's almost it as reagents. We've got a couple of reagents in our thickeners, but for the most part, it's what we call dense media separation. That takes us from 1% or 1.2% to a SC6, 6% product, and we think that that's a massive advantage, especially if you're in the boreal forests up here. You would not get a lithium brine deposit approved up here. They're just so hard on the environment.
Right, and so now I want to talk a little bit about current events in the lithium market. So we know that prices have been high, they've leveled off a little bit. A couple of weeks ago, we had the report from Goldman Sachs telling us the battery metals market is over for now, the bull market. What is your take on that as a lithium business?
Yeah, it certainly got a lot of people's attention, got our attention. There were some assumptions there around supply coming in from other places. China China and Africa are some of them. Do we subscribe to that? No, we don't. Do we think that it had run hard for a while? Yes, we did. None of our fundamentals, our cash flow or our cash models are based on the types of prices that we're seeing at the moment. We really want to be a first quartile producer, which means that we should see the highs and lows of that cyclical market in any case. So, it was sobering, and I think it's probably meant that lithium is a little bit risk off at the moment, but that's okay. And I think that provides opportunities for us. You know, we are cashed up. We're in a great province. We are looking at other opportunities all the time. And, 2 months ago, those smaller opportunities are expensive. And would we have gone in on those? No, we wouldn't. Are we looking now through a different lens? Yes, we are.
Okay, very interesting. And now just a couple of questions as we're wrapping up. So obviously you're an ASX-listed company operating in Canada. You've come to PDAC. I imagine you're looking for international investors as well. Would you be looking for them on the retail side, on the institutional side? What are the goals there?
Yeah, that's a great question. So we, as I sort of said a moment ago, we're pretty well cashed up. We've got a great cash burn runway for the next couple of years. We have excellent opportunities. We really want to position ourselves as a North American producer, and so those funding opportunities we would like to see come from North America. Some of that's related to supply security and a few other bits and pieces. The question around the retail investors versus the instos, we support all money. At the moment, we probably don't have any cap raises coming up. We definitely have strategic partners. We've inked one recently with Lithium Americas Corp. That came with a whole heap of expertise around chemical processing side. So we are always evaluating opportunities. For us, we would evaluate opportunities from both sides of the funding spectrum.
Of course. Now, maybe just as we're finishing, if you could give me a look at the next 6 months out into the end of 2022 for the company.
Yeah, we've got a really exciting 6 months. So for the uninitiated, we're in a part of Canada that has some pretty challenging weather. We've got snow for 6 months, and then we've got no snow and bright sunshine for 6 months. So we've been busily drilling targets over the snow season. When it comes to generating the targets, which is field mapping, channel sampling, soil sampling, that sort of stuff, that has to wait for what we call the exploration season. So our camps are full at the moment of environmental science types, explorationists, field geologists, drillers. We've got a really busy 6 months ahead of us. We really want to make hay while the sun shines. Then when the snow starts again, we've got all those targets, we've field truthed them, and we've got very clear drilling and simple drilling over those snowy months. Some groups choose to pack up their gear, when it gets cold, and I mean very cold, minus 45. We had a day on our drill rig last snow season. We choose to drill all the way through the season for obvious reasons. So it's imperative that we've got really good targets, which we do already. So, in short, looking forward to an exciting season and, getting boots on the ground.
Okay, well, perfect. I hope it goes well. Thank you so much for joining me today.
Thanks so much, Charlotte. Good on you.
Great, of course.
Okay.
And once again, I'm Charlotte McLeod with the Investing Network, and this is Matthew Herbert with Green Technology Meadows.